right. Well, so thankful that you're all here. My name is Julianne Peterson, and we are here with Zoom at 8. And as you know, I work for Old Capital Lending, and we are a premier provider of debt, not only in multifamily, but other asset classes. We close $1 billion a year. That is a lot of loans. And you know what? You want a lender that has experience in closing, that provides value, that we can lend to all different types of lending sources and asset classes. And you know what? We can bring to you LPs, attorneys, we've got property managers, insurance brokers, and we work on your behalf. That is the kind of lender that you should be looking for. And you know what? It's not about who's got the best price. There's more than that. The real value is who can close. And you know what? This is a long-term relationship. You want to know, like, and trust your lender. And so the purpose of Zoom at 8 is not only to provide a resource for lending, but also to provide you, our Old Capital clients, a place where you can learn, network, and also close deals together. We have had a record of 2 loans that we have helped close with just simply these rooms. So it's pretty cool. Well, the time is now. We are just so thrilled to have our next guest on the Zoom at 8. And I have to tell you, I've been on his track to try and get him here. This is John Casmon is in the house, and I'm trying to find his introduction. Here it is. So John Casmon is a real estate entrepreneur who has partnered with busy professionals to invest in close to $90 million worth of apartments. John hosts the Target Market Insights podcast, where he covers multifamily and marketing insights. In addition, he is the co-creator of the Midwest Real Estate Networking Summit, a no-pitch event to connect like-minded investors. With a background in marketing, he has overseen campaigns like General Motors, Nike, and Coors Light, amongst others. John has even been recognized by Black Enterprise magazine as one of the top executives in advertising and marketing. That is an impressive resume. How are we so lucky to have you, John? Thank you so much for coming along and spending your evening with us. How are you?
I'm doing great, Julie. Thank you for having me. It's an absolute pleasure. It's always great to hear your resume or bio read out loud because, I don't think of myself as all that stuff you just said. All of those things are factual, but, it's one of those things where we always have to make sure we highlight our wins and our successes because, we have to do our affirmations. And that's part of that process is hearing all those things that you have accomplished out loud because I tell you, I didn't work out this morning and I feel like I'm a failure just a little bit for not getting that workout in. So it's always good to hear about the wins and successes.
Well, I'm sure you'll make up for that later tonight or tomorrow. So no worries. Don't lose any sleep over it. Listen, I
Yeah,
am
absolutely.
here. I want to know about John Casmon. I want to know tell me about your life. Tell me about yourself. Where are you living now? I know you were in Chicago for about 8 years. I want to know what you think about that market. Why did you leave Chicago? I know you probably have some personal things, but man, you're in Cincinnati, which is an amazing, amazing market, and would love to hear about that. Did you start in single family? Did you just jump right in with multifamily? So take us through some of those questions.
Yeah, absolutely. So, and as I'm sharing kind of my story, I recognize that this is less about me and more about, how can we actually help everybody who's taking time out of their Tuesday night. So, as I'm
Yes.
talking, I want you just to kind of share, picture where you're at in your journey, or maybe where you were at some point, or where you want to get to, and just align yourself with some of the things that I'm going to talk about, right? So, I really started from a professional standpoint, W-2 employee, corporate America, with a lot of the marketing things that you mentioned. Out of school, I went into marketing, had some great projects that I worked on. I ended up getting hired directly by General Motors in Detroit. So I was working at GM in Detroit, Motor City, working on super cool campaigns. I was working on Pontiac at the time, and at Maxim Hot 100 parties and the Super Bowl and New Year's Eve Times Square, and I'm on set at Jimmy Kimmel and all these kind of cool things, right? And as many of you know, from 2007, 2008 rolled around, and we know what happened to the economy and the automotive industry. And during that time frame, as a young executive, I was doing all these cool things, but I got to a point where I had to cancel some of the contracts I was in. We had no idea what the future was going to hold. And I was working on the Pontiac brand, which ultimately got shut down. So I didn't even know what my own future was going to be. And I think at that time, I really started to pay attention to my options. As I put my resume out there, I wasn't getting a lot of callbacks. Had little to do with me, but people weren't lining up to hire automotive marketers. They just weren't. So at that moment, I realized that I really needed to take my future into my own hands, and I could not rely on a corporate job, no matter how big that company was, no matter what the vision was of how successful that company was going to be, or what my vision of it was. At the end of the day, a couple of things are going to happen. Either you're going to work there forever and you retire, and maybe that's the best case scenario. Maybe you work there forever, but you never make it up to the level that you wanted to reach in the company. Maybe you are forced to retire early, or you're sent around the world doing jobs or gigs that you really don't want to do, or you get let go. And unfortunately, we had a day of layoffs. And when that day came around, I was told I would be fine. But I recall distinctly, I walked into my office and there was a red light blinking on my phone. And when I saw that red light, I panicked like any person would do. I took about 20 or 30 seconds before I actually checked the voicemail. And it was from the guy in front of me. And he had been let go, and he was venting, and he just talked about how he had spent 22 years working for this company. They fired him. He was diabetic. He didn't know how he was going to pay for his insulin. And I mean, he was just distraught. And while I felt very empathetic for him and the situation he was going through, I also realized that I never wanted to feel that out of control, no matter what was going on. And I really turned my attention to real estate shortly thereafter. So for me, I started investing on the side. I bought a 2-unit building about maybe a year or two after that in Chicago. I guess I skipped over something. So I left Detroit. Around that time, I was, continuing to do well. I worked on the Buick team, made Buick one of the fastest growing brands in America, won all sorts of accolades and things like that. But I used that as kind of my pivot to move to Chicago, which is something I wanted to do. I felt like Chicago was a bigger market, more stable, had a lot more things going on. I was still pretty young at the time, and thought it would be a great place to live. So I moved to Chicago, and I also moved there because I wanted to start investing in real estate, and I didn't feel like Detroit was the best place for me to start. So I got there. My wife and I did buying a 2-unit building. That went extremely well, much better than I could have anticipated. We did a house hack with FHA financing, and that worked out great. From there, we bought a 3-unit building. That was a pure investment. Saved up my money from the first deal. Ended up, refinancing that. Used that money to buy an 8-unit building, commercial property. So that was really my foray into commercial real estate investing. Hired a professional property management company to get some experience managing the manager, and learned a lot of things in that process. But ultimately, I knew to continue to grow, we were going to have to start working with other investors, because I had done all of those deals with our own money up to that point. And when you spend $100,000 of your own money, and you've got 2 little kids, you're working a full-time job, and you're not getting, tens of thousands or even multiple thousands of cash flow coming back, it's tough because it's a longer term play. And ultimately, my goal was to make sure I was never in that position that the young man in front of me was in, where he got let go and he didn't know how he was going to pay for bills. So I was making money. I had passive income coming in, but it still wasn't enough to replace my W-2 job. So as I started talking to more and more people, they told me the secret was really scaling up and working with other people, which I was kind of against at that time. I really wasn't trying to work with other people or be responsible for them and take on that kind of responsibility. I just wanted to build my own personal portfolio. But at that moment, I had a shift that if I really wanted to accomplish my goals, I was going to have to work with other people, and I was going to have to help other people accomplish their goals. So from there, we really started to scale our portfolio. And as you mentioned, we're up to around a 900 unit portfolio, value close to around $90 million today.
Do you still own the 2, 3, and 8 units? Is that something that you're still messing
I
with, or did
sold
you get
them.
rid of that?
Yeah, I sold them all in reverse chronological order. I sold the 8 unit first. I sold the 3 unit about a year and a half ago, and I just sold the 2 unit over the summer.
Wow, amazing. So now you're in Cincinnati. What point, it's pretty new that you went to Cincinnati, right? So
Yeah.
why did you go there? Was it for multifamily? And what have you found now that you're there?
Yeah. So, like many people, I moved here because my spouse made me. Uh,
With the rope,
I,
right? All around.
with a
Yeah.
rope, with a
Yep.
rope. So,
Mm-hmm.
I say that tongue in cheek, right? The reality is we had a lot of conversations about the life we wanted to create, and at some point, with 2 little kids, we were in Chicago. While we love the city, it's a great place for
Mm-hmm.
young people. As we had our kids, our family is all in Ohio,
Mm-hmm.
and as we started to watch our kids interacting with their grandparents, their aunts, their uncles, their cousins, we realized that they were missing some of that with
Mm-hmm.
us not being there. Plus, I was so busy working my W-2 job, plus building my real estate portfolio, it was kind of hard to, juggle everything. Anytime we needed to do something, I had to go bring in babysitters and things like that. So we decided to move to Ohio last year. So we moved to Cincinnati. I left the
Okay.
W-2 job and all of that and went full time into real estate. So it was, I would say about 75% family, 25% real estate. We do have a building here. We're looking to grow our portfolio here, have a couple of deals in the works actually in this market. So we're definitely looking to scale our portfolio here. But it was about 75% family, 25% business.
Mm. So what do you find, and most of your other properties, you've got 900 units. Where are those located?
Yeah, so some of them are in your backyard, right? So we've got some stuff in Texas. We have some stuff in Florida, one in South Carolina, and one here locally in Cincinnati.
And so are you going to make Cincinnati your focus moving forward, being that you're there? Is that, boots on the ground? What are you finding in that market that inspires you or, concerns you?
Yeah, that's a big chunk of our strategy going forward. And I would say for anyone, you have to figure out where do you have a competitive advantage. I know it's easy to look at all of the Marcus and Millichap data, or everyone's got their data, right? I'm a data guy. I got target market insights, right? So I'm obviously looking at market dynamics and all that stuff. But the reality is that I can't compete as strongly as someone else with boots on the ground, with relationships where they can go take a broker to lunch or coffee or golf, and I have to fly in every single time. So it's
Mhm.
tough to really compete at that level when we're talking commercial real estate. Okay. So you have to understand, where do you have a competitive advantage? And the way I look at it, I'm local in Cincinnati. I'm in the area. I'm more committed to the market than some other folks may be, who are maybe just simply looking for yields or a good deal anywhere. So I'm going to come across more opportunities. I'm going to know the landscape. I'm going to have the connections. Even when I see a deal, I probably know 1 or 2 people who passed on that deal in order for me to see the deal. And then by the time other people in my network see the deal, I'm probably telling them why I passed on it, right? So that level of connection is only something you can get by being deeply ingrained in the market. And if you're looking for the best deals to bring to your investors, you really have to understand it at that level. So for us, we do like Cincinnati a lot. It's one of the more stable markets in the Midwest. I think the Midwest has a reputation from some folks with this Rust Belt mentality, but there's phenomenal cash flow in the Midwest. There are some markets that are absolutely growing. Indianapolis, Columbus, 2 off the top of my head that are seeing phenomenal growth. Cincinnati's a bit more stable. It's growing, but it's growing more steadily, slowly. But the yields are phenomenal. It's one of the strongest yield markets in the country. As a matter of fact, out of the other top 5 yield markets, it's the only one that has a population increase. The other markets are Detroit, Cleveland, markets like that, where yes, you can get great yields, get great cash flow, but you're still seeing some declines in population and some overall economy declines. Cincinnati's a market that has seven to eight, depending on who you ask and what day it is, seven to eight Fortune 500 companies here. And Amazon's building a $1.5 billion hub because Cincinnati is kind of central. You can get up to Chicago, you can get over to Indianapolis, you can get down to Atlanta, you can get to a lot of the places in the country within a day's trip, even in the car. So based on its location and the growing need to be able to deliver packages and services, same day delivery, that's a huge thing. And we see with COVID, that's becoming more and more important for people. You want to be able to just be on your computer, order whatever you want, and have it show up at your doorstep as quickly as possible. So that's something that Amazon's investing $1.5 billion to do. There are a lot of jobs that are coming here. And keep in mind, Cincinnati as a MSA also incorporates Northern Kentucky. So there's Northern Kentucky, there's up to the Dayton area, Middletown. So it's pretty wide when you look at the overall MSA. We do like it. There are a lot of things to like for this area. It's a major city with two major sports teams, so it's not just some random tertiary market that no one's ever heard of. There's a lot of things to do here, and the weather is just a little bit better than what I had in Chicago, which is also really nice for me too.
Yeah, and I know that for me, when I was invested there, you have to be concerned about, just simple things like your pipes bursting. When you show up with your, infant children and the pipes burst, what are you going to do? Your weather is a little bit easier on those assets. So that's a smart move. I want to touch on something that you said, and it's really, really important. And I think that we could probably use the rest of the time, but I don't want to use the rest of the time. So I'm putting that out there. But you made a statement, and I want you to talk a little bit further on it. Working with others, helping others. I'm a helper, you're a helper. In this industry, we're all working together. We're trying to create value so that we can help others and then potentially work together on a deal. I am curious. I know that you've done this. Have you ever felt like people have taken advantage of you? How is that? How does that feel? How did you deal with that? I know sometimes I feel that way. We put out, and then we find out, in my case, they're going with another lender after we've created all of this information and help. And that's difficult. So I want to hear it, how it was for you. How did you manage that? How can you kind of speak to us about encouraging other people, to do the same, but to maybe ask for the support after you've given all of these
Yeah.
opportunities to help?
Yeah, absolutely, Julie. So I think as we think about helping other people, and I'll just ladder this up, right? So for me, with the background in business, more specifically in marketing, when things really started to make sense for me, and I heard a lot of people saying earlier that they're looking to raise capital for deals they're working on, right? And when I was first approaching things, it was hard because I had a hard time asking people to invest. I knew I needed to. And I think reluctantly, when I talked about making that transition from doing it all by myself to working with other people, I think part of that block was I didn't want to have to ask someone else to help me. Right. And when I really had a huge aha was the moment I understood that I was really helping other people, not just them helping me. And when you understand your value from that standpoint and the value of what you're doing, the service you provide, now you are empowered to simply find the people who are looking for what you have to offer. And think about if we were not talking about real estate. If I were a baker, right? I wouldn't go to my mom and my aunt and my brother and say, hey guys, I'm a baker. I'm gonna bake you a sheet cake, and you're gonna pay me whatever it is you get paid for that. They would be like, dude, I don't need a sheet cake. Why are you like, no? But I might say, hey guys, a baker, I'm opening up my own bakery. If you know anybody who's looking for, cakes or designs, anyone that's having a birthday party, anybody having an anniversary party, wedding, anything like that, I would be happy to, pass along my business card and give them a quote on what a package is, right? And your family would be happily do that for you, right? Of course, my cousin's getting married next week or whatever, right? So this is a similar thing. If you are talking about your business from that standpoint of helping other people, sharing what you do, sharing your knowledge, educating people, it's going to be easier for them to help you. And you really have to shift your mindset from you raising capital to you attracting capital and attracting the business that you need for your deals. If you are serving other people, helping other people, it's going to be way easier to do that. Now, Julie, you asked specifically about as much as you give, and you give a lot. You give, the platform tonight and everything that you're doing. And do you feel a certain way when people either use you or take advantage of it, but they don't do business with you? I don't. I don't have that because when we give and we serve and we educate, you have to do so unconditionally. Yes, I absolutely expect to get something out of it. Okay. If I'm coming, I'm spending my Tuesday evening with you right here. I genuinely expect to have this, be a positive for me and my business. But that doesn't mean I expect every single person on here to go to my website, sign up to be a new investor, sign up for some coaching, or hire me to consult or anything like that. Right. All I want to do for me is I'm working on building my brand. I'm building my reputation. I'm building all the things that I am. And that's all I can do. It's the same way back in my marketing days. I can't force you to buy a Buick, and I'm telling you, I had to try at one point. It did not work. Couldn't give them away for a minute. I can't force you to drink Mountain Dew. I can't force you to, do any of the products that we have. All I can do is communicate the benefits. All I can do is understand what you're really looking for. All I can do is show up, share our shared stories, our passions, understand you, demonstrate that I understand who you are, and tell you why or demonstrate why my product or service is the best solution. I'm biased, obviously, but if we have a connection, I just want a shot. I just want to be in your consideration set. I just want you to look at me and put me up on the screen. When you're thinking about investing, what are you looking for in a sponsor, in a syndicator? Do you want somebody who's trustworthy, someone who's accessible, someone who is a human being, someone who understands your situation, what you're trying to get to, understands, what your investing criteria is, and you're not just trying to jam something down your throat because it helps them, but they're saying, hey, you know what? Yeah, we're gonna hold this deal 7, 10 years, man. If you want a quick flip, it's probably not the deal for you. Are you looking for a partner? And all I can do is position myself as that person, continue to stay in front of them, continue to educate them, continue to be a resource, an educator. And hopefully, when there's an opportunity and it's time to do business, they are going to consider doing business with me. I think that's all we can ask for. And certainly, if someone decides to go in a different direction, I want to know why. It's not because I feel like they use me or anything like that. It's simply because clearly there was something that I didn't deliver that someone else did. And some of those things I can't compete with, and I gotta be okay with that. If you only want to do deals in Dallas Fort Worth, well, I don't have any deals in Dallas Fort Worth. And if that's all you're doing, and you're just dead set on DFW, I get it.
Yeah.
Nothing I can do about that. You know, um, timing, rates, whatever the case may be. But I also know that there are people who will do business with me simply because they like me, simply
Mm.
because I'm accessible, simply because I'm willing to share and give these insights that some of my peers would not. They don't want to tell you how to actually grow your investor database. They don't want to tell you how to actually, do some of these deals or do these things that they're doing to get their deals done. Because then they'll see you as a threat. They want you to be in their deal. They don't want you to go do your own deal. So you have to ask yourself, as you align yourself, who do you want to align yourself with? And for me, when it comes to building a personal brand, connecting with people, building the relationships, I believe that I'm going to get mine based on the effort I put out there and the value I create, and I will continue to fine tune. I'm going to get feedback if people tell me, or if I don't get any feedback from this, or no one decides they want to talk to me after this. All right, maybe I should have talked about something else, So you learn from that. That's all you can do is really get feedback, get better. Same way if I were doing a marketing campaign. If I spend millions of dollars on an ad campaign and we don't sell anything, well, guys, our messaging must have sucked. We must have
Mhm.
ran the spots during the wrong time. We don't know who our target is, but just step back and you got to revamp and relook at it. And I treat this the same way. It's all business. We want to be personal. We want to make sure that we are putting our best foot forward. But ultimately, it's not on them to buy. It's on me to demonstrate why my products or services are the best solution for their needs.
So do you approach multifamily marketing similar, the same, differently than you did at Coors, at for Buick, or for the car manufacturers? What is different?
Yeah, well, for starters, I used to have a big team. I don't have the same amount of resources that I used to have. But I would say there's two things, right? So, yes and no, where I'll give you guys some tips, right? So, one of the things that I do that helps me stay focused is I actually do have a target avatar, an investor avatar.
Mhm.
So just like on my Coors Light days, we knew who our target was, right? This was the 21, we call them legal age drinkers, right? So 21 to 30 years old. This is person wants to day, he might day drink with his buddies before he goes out at night. He wants to drink beer at home. If he gets out to the club, maybe he's drinking liquor, whatever, right? So we get into that mindset stuff. Same thing with Mountain Dew and these different brands, but we go into the psychographics of it. And I try to go through that same process. What is my investor thinking about? When you read my bio, some of the words are very meticulous. When we talk about working with busy professionals, and this is my avatar. This isn't to say this is the person who has the most money to invest, but the person I think I can help the most is the busy professional. It's the person who works W-2 corporate job, is working for one of these large corporations, has some money, has been, maybe in their 40s, maybe their early 50s. They have some money. They're starting to think about, what the next step of their life looks like. They have kids that are maybe, getting ready to go to college, whatever the case may be. And they have worked really hard to rise up in corporate America, but what do they have to show for it outside of some, materialistic things? And investing in real estate's a way for them to grow their assets while continuing to grow everything they're doing, right? So understanding that mentality and what they're looking for, it helps me to create the things that they need, to speak to them, to figure out how to reach them. And there are times where, everything we do isn't just for that person. But when I'm talking to my investor, a lot of times when I get in touch with them and they tell me, I'm an IT professional or I'm an engineer or, I work in accounting or finance for this company, I already know 80% of what they're thinking, maybe the challenges that they face, why we're having a conversation, even before they start to tell me more of their story, just because I've done my homework on these kind of things, right? So I think that helps to get clarity on what people are looking for. I have a second target. I'm not going to get into that, but you want to understand your clients, just like anything else, right? If I was a baker, you know who your core clients are. You don't need to know who they are on a personal level, but they're probably big parties, right? So weddings, birthday parties, anniversary, like okay, this is going to be 70 to 80% of my business. What do we need to do to service them? And I think any business, multifamily investing, if I was, selling these mugs to anything else, you need to understand your business. And if you're a multifamily investor, make no mistake about it, it's business. Let me tell you the biggest difference from investing in single family properties to investing in commercial multifamily. Single family, you are buying properties based on what a homeowner did or didn't do. You're finding deals and you are going to, fix it up, flip it, whatever it is you do to rub it down. I don't know, but you're going to sell it based on that. Okay. And if you do enough scale, you do enough properties, you might be able to create some systems and make it a business. If you're flipping 30 homes a year, yeah, now you might have a business. You might have an acquisitions person, you might have contractors, whatever. But if you flip two, three houses a year, it might just be you driving around. You see a house, you call, you put an offer, you go flip, you do whatever, right? And you might be able to make that work for you. When you're buying multifamily, you're buying a business. So you need to think and treat it like a business. You're buying the net operating income, you're buying the future projections, you are buying the business plan, you're implementing the business plan. You have to communicate that to investors. So the marketing aspect, the business aspect, it's key to being a successful investor. So if you don't know who your clients are, who your customers are, and it's two sides, right? Because I have clients slash customers that are residents. So who am I going to rent to? Who's ultimately going to pay for all this stuff, right? So who are the residents that we're going to attract for these properties? But then also, who are my investors? Who's going to invest in these deals? What kind of returns are they looking for? Are these people who are looking for trophy assets where they just want to tell their friends, hey, look at this Class A building I just bought? And that's really what they care about. They're not really, as concerned with getting every dollar of profit possible. They just want to feel really good about that property that they could tell their buddies on the golf course that they own a part of. Or these people who are really locked in on the returns, these engineer minds who want to understand how you're going to get them a 19% IRR. So you have to understand those dynamics and also understand who you are best to serve, because you may not be the best person to serve one of those groups, but you might crush it with another group. So I think the more clarity you have on who you serve, who you help, who your target is, the better you're going to do in business.
Wow. That's really wonderful golden nuggets right there. I wrote them all down. I'm probably going to have to press the rewind button a couple times. What I know we're getting close here. Somebody had asked, do you ever refer an investor to another sponsor doing deals in a market that you don't work with
I
or
do. I
work
have.
in rather?
Yeah, I have.
Okay,
And
there's the
that
answer.
typically comes down to, again, it goes back to understanding what that investor is looking for and paying it forward. I mean, for me, I the one thing is that this is not as competitive as some people may think it is. I mean, typically, um, and that's why I go back to I'll give you one more of my secret nuggets. Okay, if you know who your investor, and the reason I'm drilling in on this is if you know who your investor is, now you can start to ask yourself questions like, where do I find this investor? Because everyone on this call, as great as this group is, everyone on here, I didn't hear any. I heard a few people saying they're interested in being passive. I heard most people say they're trying to be active. So if I am only looking for investors in groups like this, I'm competing with half of the people listening, right? So if I don't have a deal right now at this moment, I may be competing with a lot of different people. So part of it is also figuring out where can you find investors that are not necessarily in these multifamily investing groups or sessions. Okay. And when we have that, if someone's looking for a deal, I mean, last year, geez, you want to talk about investing? I took a family member and I put him in someone else's deal that I had nothing to do with because he was looking to get into something by the end of the year. There was no way I was going to get a deal by December. And I knew somebody who had a deal that was closing that second or third week of December. And I made an introduction to him, and I got nothing outside of a cool, thanks, bro. And I'm like, that's helpful, right? A different market, I had nothing to do with the deal, but made a quick intro. And this was a family member, right? This is someone who basically is a loyal customer to me, if you want to put it that way. But on the same note, they had a need that I couldn't fulfill at that time. So we make a recommendation. So I think you have to have that mindset of helping and serving other people. And that comes down to it. I think it's clear. There are people who truly want to serve other people, and there are people who are trying to take care of themselves. And if you are out to serve other people, it will show in the subtle acts that you perform. And for me, it's just a matter of again paying it forward. I mean, there's some people in here I meant to do some shout outs, but I saw my man Jim on there. Daryl, how you doing, bro? Uh, Davita. There's some other people as well that I talk to all the time, and we have conversations like this, and we try to just pay it forward as much as we can, helping other people. And you just if I ever needed something, I know that I have a Rolodex of people. I say Rolodex. I have an active campaign or Mailchimp CRM system of people that I can refer to and reach out and hopefully get anything that I need to do a deal or to take care of any problem or challenge that I might have.
Yeah, it's a great network. Fabulous. I'm going to ask one last question. I know you do this conference, which is fabulous. There's no advertising. You also do a podcast, which is, has been really, really good about connecting people and figuring out marketing and such. And then you have a meetup. You used to do a meetup. Do you still have a
Yeah.
meetup?
Yeah,
Okay.
we did it last night. Yeah.
Oh, okay. So which one would you do? If you had to choose one of those, which one would you do? Which one would be it? Which one would you recommend somebody do? Well, let's talk
Awesome. I
about for
love it.
you.
Well, I want to answer the question. For me, it doesn't matter. Again, this is not about me. This is about the audience. So here's what you need to do. First and foremost, you have to do a quick assessment of yourself and your own strengths and be honest. Ask somebody else if you don't know. Okay. There's different skill sets and different things that come about, each different pathway. First of all, I would not do a conference. If you are newer into the space, if you don't have a thought leadership platform already, a conference is the hardest thing because you have to sell tickets, you have to get all the speakers, you've got to coordinate everything. Unless you have an events background, I wouldn't do that. And right now, with everything being virtual, it's tough. I mean, I know a lot of power players who are having a hard time filling seats for their conferences right now. So I would not do that. Let's put that on the shelf. So let's talk about a podcast, a blog, or a meetup. They're three different things. Okay. I believe there's right around 1 million podcasts right now. So that may sound like a lot, but it's not. It's actually the smallest number, a medium basically that's out there. So launching a podcast is a great way to get your word out there. Podcasts are one-on-one. So even if you're shy, even if you don't want to be on stage in front of people, any of that, a podcast is a great one-on-one way to talk to people. Their production is laborious. So if you don't have the budget to hire that out, that can be kind of hard to do. A meetup is great because just like this, you can host, you can get in front of people, and you can connect. So if you are a natural connector, and if your goal is to build your network, that's a great way to do it. If your goal is to simply educate and connect and build a bigger brand, maybe I would lean more on the podcasting side. They both take patience. When I started my meetup, I remember the third one we had, there was a snowstorm and only 4 people showed up. In Chicago, right? So 4 people showed up to my meetup, and it was actually one of the best meetups we ever had. One guy ended up being my investor, another one ended up becoming my underwriter, and a third guy, ended up doing some other deals with me on the side. So 3 out of 4, that's 75% conversion rate is, phenomenal. So you have to take advantage of those small groups if you have them. The podcast took a while as well to build, but it helps to build credibility. And it's a great platform if you're looking to connect with people, leveraging credibility. We don't have real time for it, but I'll go back to marketing. If you think about brands that are looking to build their credibility, a lot of times they align themselves with a sponsorship, right? They might go get a big superstar to endorse their brand or product. Well, doing a podcast is kind of similar, right? If you can go out and get an investor with $1 billion portfolio, even if you've never done a deal, but you can go get a guy with $1 billion portfolio on your podcast. What happens is now you start to borrow a little bit of their credibility because you were able to bring them on your show. They're loaning you a little bit of their credibility. In return, you're supposed to broadcast and promote them. But what happens is your network now sees you as someone who has the ability to connect with someone of that level of influence, with that level of success. And guess what? Even if you've never done a deal, if you've done interviews with people who have billions of dollars of real estate, and you can demonstrate this to your friends and your family, do you think they might know that you know a little bit about what you're doing, or you've learned a thing or two about what you're doing, or at a minimum, you know where to go get some answers? So it's going to make you more credible. So I think a podcast can be great, but I would caution you that it's still a marketing platform. A meetup is great because it's quick and it's one-on-one. And if you're looking to really engage and interact with people, a meetup is one of the most powerful ways to do that. But you have to get clarity on who you want to attract and what value you're going to offer them. Because if if you're doing something like this and you're trying to get investors who are looking to do deals, you need to set it up that way and make sure that they get that value, or they're not going to come back. If they're new investors, you can't go over their head with a bunch of tech stuff or industry jargon that they don't understand, or they won't come back because they didn't get any value. So you have to get clear on who you're going to serve with that platform. But if you can do that, I think either is great, but the meetup's going to be a little bit easier, less time consuming than doing a podcast.
Excellent. How do we get a hold of you? What would be the best way to engage you?
So the first thing is, just to give you guys a little bit of something else, we do have a sample deal on our website. It's a sample deal. Don't kill me on the numbers, okay? It's a sample deal. I decided not to go back and make it the greatest thing ever, but it's more about the deal package, just the way information is packaged and served up. So that's on our website, casmoncapital.com/sample deal. And you'll also get some other marketing tips and multifamily investing tips through our email system there. And then if you just want to send me an email, you can email me at john@casmoncapital.com. Either one of those two are great. And then if you haven't subscribed to the show, you should check it out. It's called Target Market Insights, anywhere you listen to podcasts. So that's three things. I normally tell my guys, Daryl, I tell people to give one way to contact you, but since I have everybody's attention, I'll give you three. So download the freebie, casmoncapital.com/sample deal. Okay. You can email me. If you really want to email me, you can, but if you download that, you'll be able to email me. Okay. And then check out the podcast. It's Target Market Insights, wherever you listen to shows.
All right. I'm hoping that we can get that out. John at casmoncapital.com.
That's
for
right.
sure. Okay. This has been an amazing visit with you. Do so appreciate all the information that you've shared with us. I think everybody can walk away tonight saying, I am smarter because I've met John and you've shared so many great tips.